Aloha. Hey, it's Julie Ziemelis, 365 Hawaii, 365 Hawaii Group, Keller Williams, KW, Big Island. And today we are here to talk to you guys about your November island-wide real estate and mortgage update. Today we have, let's start with the east side this time. We've got Amber Haley from Real Broker going down the peninsula there. We've got Jana Mahoney from Keller Williams as well. We've got Delania Branham from eXp Realty. We've got Eric Ziemelis from KW Big Island, and we've got our mortgage pros here today, Scott and Marla Wynn from the Wynn and Egan team. So what we're going to do is we're going to start with Jana, who's going to actually tell you a little bit about what's happening with the Kona market, because today our buddy Lance Owens is actually on the East Coast, and so he will not be joining us today, but we do have the stats. And also you'll hear all the stats from all the different parts of our island, and then you're going to hear the mortgage information. If you're on the call right now, please put your questions in the chat box. If you're not here live, it's because you are not in my group. So I'm going to put some information about how you can join the 365 Ohana group, so you can join right in as well. So let's start with Jana Mahoney on what's happening with the Kailo Kona and North Kona market.
Okay, so the good news is there's 98 active listings in the residential area for Kona, which is really nice. 64 of those have been on the market for more than 30 days though. So you only have 34 new listings. The average days on market right now is 84, which is nice. 2 of those are leaseholds, which might be a good topic of conversation for an entire, an entire session. But basically, you've got 96 that are fee simple, which is probably what most people want. When you look at Kona for just the condo market, there are 46 condos now that are actively listed, and 26 of those have been on the market for more than 30 days. So 20 new ones. The average days on market is 60. You've got a range there of like 150,000 to 572,000 on the condos. So it seems like you've gotten a little more inventory on that. And I know Delaney has specific neighborhoods and markets that she's going to talk to us about. So what I'm talking about is all of Kona. So I just pulled all the TMK for all of them. So 98, that's kind of nice. The average on the residential is, this is crazy, the median, I guess I should say, is $1,299,000. So it's still prices are still high. We're just getting more houses on the market, and they're taking longer. The days on market is getting a little bit longer. Kind of what I'm seeing in Kona. So that's the Kona market, big picture. For, let's see, Waikoloa Village of Montalani, there are, let's see what this is. Start with the houses. So residential, there are 28 residential properties now on the market in that particular TMK. And last month there were 23. So we've got 5 more, which is kind of nice. Days on market went from 63 to 65, so just a tiny little increase on the days on market. The median now is about 965, and of course you've got a couple of pretty expensive ones in Montalani that are bumping up that average somewhat. For the same TMK for condos instead of residential, we have now 25 compared to 18 in our last TTT meeting. We have, let's see, the average for the condos is 1,075,000, and 62 days is the average days on the market. That was last month compared to 42 this month. That's kind of the Waikoloa Village in the Montalani area. In the Waikoloa Resort area, which is a different TMK than Montalani and Waikoloa Village, there are now 14 condos that are active. There were exactly 14 last month, so no change there, but 6 are new. The average days on market has gone from 57 to 45. in the Waikoloa Resort. So I think that what you typically see this time of year is, there's kind of a slowdown. You've got less people that are buying this time of year, but it doesn't seem to affect condos in the Kohala, North Kohala area as much as it does the houses. I think maybe families look more up in the village, whereas investors look more down in their resort. So I think that's kind of a result of that. And then, of course, the houses in the 369 area are Puako, and there are 5, and they're exactly the same 5 that we had last month. So the days on market just went up for all of you.
Okay, great. That's a good indicator of what's kind of happening here. And to go deeper into what's happening here, Delania Branham is going to be talking to us about specific markets and neighborhoods that she is reporting on every month, so we have an idea of like an apples to apples experience of what's happening in the Kona market. So Delania.
So no big surprises, not a lot of changes. We're going to start with Pualani Estates. We currently have 4 active listings. They are priced between $865 and $925. The 2 that are on the lower end have had price reductions. One at totally $155,000. The other one has come down to $80,000. Those have been on the market 4.5 months.
Wow.
And the 2 newer ones are actually priced on the higher end. They've been on the market 9 days and 20 days. So prices aren't dropping, but properties are sitting. October, we saw 2 sales in that neighborhood, 930, 935. Both were under list price, and they were both on the market, one at 37 days and one at 84 days. So if you look back at September, the active listings were 899 to 945. Sales were 859 to 895. So not dropping, not changing much. Condo wise, Ali'i is the one that we've been looking at. Last month, there were no active listings. There are currently 6 active listings in there now. So they are priced between $478 and $589. They've been on the market between 1 and 12 days. So lots of activity in there. There was 1 sale in October. It was on 9 days on the market, sold at this price. That was at $499. If you go back last time, the sales in September were $450 to $535. So that one's hitting right in the middle there. So again, not a lot of changes. Not seeing a market crash in these neighborhoods. Lokahi Makai, a little less activity, but another one that we're watching. Currently, there's 4 listings. There's one at 800 that's a short sale that's been on for a little while. Highest price in there right now is $925, and those have all been on the market between 13 and 84 days. They've had price reductions, 3 of them, $50,000, $60,000, and $25,000. So they're sitting, they're dropping. No sales in October. The 1 sale we had in September in that neighborhood was at $975. 3 days on the market, $15,000 under asking. So here we go. Kind of the same old in these 3 neighborhoods. So that's somewhat representative of what we're seeing across the market. A little softening. Things are sitting a little bit longer. There's some price reductions, but it's not going down in flames yet.
Yeah. Amber said something the other day when we did an update for East Hawaii, was that you got sellers thinking it's 2022 and you've got buyers. No, what'd you say that, Amber?
Yes. And I did, to be fair, I did get this from like another agent, and I was laughing about it. So I didn't come up with it completely. But all of the right now buyers are acting like it's 2008 and sellers are still acting like it's 2021. We're all a little confused.
So it's a confusing market because the sellers haven't dropped their prices enough yet to meet where the buyers think it should be. Right. So the buyers are thinking it should be softening more and sellers are hanging on to those prices. So it's interesting because as we listen to everybody else's things too, it'll show what's happening. I think is a standstill. Am I right on this one? There's a little bit of standstill.
Yeah, and I think there's so many headlines that we're seeing from the mainland where they're having these big drops in their markets. And so everyone's thinking, oh, the market's dropping, prices are getting slashed. And like, you don't have that here, at least not yet. We still have limited inventory. There's still a lot of desire to buy. So I think people are reading and seeing what's going on and expecting that here, but it's just not.
Yeah. Okay.
And if the houses are priced right, they're still going to sell quickly. I think maybe sometimes some of the prices may be a little higher Then they could be, and I've had one recently that didn't appraise, but it was pretty close. So I think that that's kind of a thing too. If it's priced right, it's still going to sell. It's not, that hasn't changed.
Right. In
So
fact,
I can chime in on
oh, yeah,
on
Eric,
this
go
one a
ahead.
little bit. We've been looking at getting a house ourselves, and one of the houses we looked at had 5 offers on it in one day. So that definitely says that people are interested, and there's a good amount of people. Now, my thought is it is definitely on the low side. So it was a reasonable deal. So people, but they're just, if there's a deal out there, they're going to pay for it, and it's going to get multiple offers.
Yeah, and that was that had no Hana. So definitely the investment aspect of housing in Hawaii is definitely a hot market to be in right now. What we normally do is have Tanya talk about these numbers, but she gave them to me because she has laryngitis. I figured I'd save you guys from that. So let me see. Okay, so these numbers are going back 30 days. Hamakua, they had 5 closed listings. Average days on the market is 37. The average sales price is $706,000. List to sales price is 100.1%. There's 19 active listings. The prices range from 365K to 2.9 million. So that's a pretty big range in Hamakua. In North Kahala, 5 closed. Average days on market sale was 43. The sales price, I think she made the average sales price is 1.323. From list to original sales price was 88%. So there's definitely deals to be had up in North Kahala. 27 active listings, days on market was 115. Would again, prices ranging from $399 to $5.75 million. And then land on Kahala Ranch, only one sold in the past month at 3 acres, and it was $445,000. It was on the market for 11 days. Sales price to original asking price was 97.4%. There was 30 active listings. Average days in the market is 118. Prices range from 349K to 750,000 from 3 to 13 acres. In Waimea and Waikiki, 11 closed. Average days on the market was 37. Average sales price was 1.9 million. List to original sales price was 92%. 20 active listings. Days on the market was 101. Prices range from 475K to 7.9 million. And then North Kahala, 2 have closed, ranging from 760 to 1.895 million. Average days on the market is 34. There's 26 active listings ranging from 459 to 5.75, and the longest days on the market is 358. And then Hamakua, 9 closed, 315,000 to 1.499. Average days on the market is 55, and also 14 active with 425 to 2.9, and the longest days in the market for that market is 146. So there are definitely houses or land that is sitting, waiting for a price improvement or buyers to come back into the market. So there you go for the North Hawaii. So let's jump over to their side of the island. And Amber, Haley, what are going on with East Hawaii?
All right, so we'll talk a little bit of numbers. And then I kind of like what Delaney is doing with like a neighborhood spotlight. So I might talk a little bit more about exactly what's going on in HPP, since that's our biggest neighborhood.
That's a hot one. Hot.
Okay, so East Hawaii, we're talking about the Puna district and the South Hilo district primarily. So days on market in Puna was 52 on average compared to last month, 59. And last year, in case you're curious, it was sitting at about 40. So longer days on market. South Hilo hasn't changed much, 27 days on market, down from 29 days on market. As far as list to sales price in Puna, it is 92.44%, which is down a little bit, which means things are slightly selling a little bit more under asking than before, but not much, because it was only 93% the month before. South Hilo, it's about 95.9%. as compared to 97.44% the month before. So also going down just slightly, but not that much, nothing too drastic. Home sales in Puna, we had 78 close in a 1 month period as compared to, I'm actually going to compare this to a year ago, it was 115. So that's how much the market has slowed down compared to this time last year, when all those sellers we were talking about were pricing really high, and all the sellers that think we're still right there. The market's a lot slower right now. South Hilo, we had 30 sales versus 38 previously. As far as median price goes, the Puna district, that's one of the most affordable districts on the island. Median price is $375 compared to the previous month, which was $350. So we are still not seeing a decrease in median sales price. Same with South Hilo, although the price is a little higher there. The median price is sitting at $505 as compared to $490 the month before. So while there are some like crazy outliers with like people pricing incorrectly, overall, if something's priced correctly, it is selling with slightly more days on market, to kind of sum it all up. Now to talk a little bit about our biggest, kind of subdivision over here with the most inventory, which would be a good point to a good area for us to maybe touch on every month as a good point of comparison for East Hawaii. Hawaiian Paradise Park, which is a huge subdivision with over 8,000 parcels. Right now it has 69 active single family homes listed as of today, and 5 homes went on the market in the last week. Only 16 of those 69 homes have been on the market 30 days or less. So probably most that are just sitting there, they're probably priced still kind of incorrectly, or just maybe not as attractive of a listing, because I am still seeing multiple offers in that neighborhood for properties that are priced well.
Okay, there you go. In fact, we had a couple of our members of our group actually close escrow and they moved into HPP, and they're happier than heck. In fact, I met 2 that actually are two blocks apart from one another. And so it seems like definitely a lot of people are finding HPP is the sweet spot in East Hawaii. So thanks for helping them. And then Delania had closed one of them, the Kolbs, and then you had the other one with Sally and Curtis. Okay, so let's go to what the heck is happening with financing and rates. So let's bring in Marla and Scott to talk to us a little bit about what's going on.
Perfect. So interest rates are kind of funky right now. Obviously, we've seen the increase in interest rates for quite a while. Averages are in the mid to high 6s, which was a bit of a drop from what we've seen recently. And that was because of the inflation numbers that were released last week. So with inflation dropping, if you watched last month, we talked a little bit about how mortgage rates generally follow inflation. Inflation dropped a little bit, and so that resulted in a drop in mortgage rates, and that's what we saw. So we were able to take advantage of that. But what I am finding, at least in terms of interest rates, is that there's pockets because there's so much less mortgage activity, because refinances have gone away, buyer demand has slowed significantly because of the higher interest rates. What's happening is each of the bigger entity mortgage companies are kind of cherry picking a segment of the market that they want to work with. And so they will, and they move them all the time. So they might, let's say, focus on individuals putting 5% down in the state of Colorado as example, and they'll offer lower rates to that particular segment of the market. And then they'll shift gears to somewhere else and somewhere else. And so we see a lot of variances in interest rates from situation to situation, month to month. And so sometimes the average interest rate can be a little bit deceiving from what you actually might be able to obtain. So anywhere from the mid 6s to low 7s for purchase loans, 20% down, conventional financing, 740 credit score. And so that's what we're looking at right now.
Okay, Marla, anything to add?
No, as a matter of fact, I asked him earlier why I even come to these, because I just
You look great.
and
We love
smile,
having you
and
there.
he does all the
Smile.
talking because yeah.
Now Marla's really good too about making sure that when I give you guys referrals, that you're the bomb diggity on making sure that there's client care attached to that. So we appreciate that. You take very good care of our clients. So thank you. Thank you. So with the concept of what's happening here, I heard that the Fed wasn't quite done with the rates, but that was like 2 weeks ago. So now they're seeing inflation is actually not going out of control, and they're actually softening the rates, and we're not going to see the Fed raising the rates again.
Oh, no. I think we fully expect the rates are going to continue to go up.
Okay.
So just to clarify, right? I mean, yes, inflation is slowing. It's still high, right? I think we were a little bit over 8. Now we're at like 7.7 or something like that. So that's still obviously a huge issue. And I think the Fed came out and said that they're going to continue to attack this as best they can. And the big tool that they have to do it with is to increase the Fed funds rate. And again, just to clarify, the Fed funds rate is the overnight rate that banks lend money to one another. So it does not directly impact mortgage rates. What it does impact are short-term debts, things like credit cards, auto loans, commercial loans, industrial loans, things like that. And that is what directly impacts consumer spending, business spending. And if consumers and businesses are spending less, then that's going to increase the supply of goods, and that's going to decrease the price, which is what will bring down inflation. And then that's what will impact mortgage rates. So I do think that the Fed's going to continue to keep pushing rates up until we see inflation numbers that are much, much lower, closer to the 2 to 3% range that we're used to. And until that happens and inflation starts coming down, I don't think we're going to see huge moves. There's some forecasts out there from, let's say, the National Association of Realtors or Freddie Mac, Mortgage Bankers Association, that are estimating that we might see rates in the mid 6s, which is basically where the estimates or the averages are right now anyway. So I think we're going to kind of stay here for a little while until maybe first quarter, based on historical inflation numbers that have come out monthly.
Okay. Wow. Okay. Well, it's not the worst news, not the best news.
It's a really good time to buy a house
Yes,
because there's less competition.
that's right.
Things are sitting longer.
Mhm.
Sellers are willing to negotiate, help buyers, maybe with a 2-1 buy down. And you have time to get to the island and see the house before you maybe even have to make an offer on it. So
Right.
I think this is a perfect market for buyers, but buyers are scared because of everything they're hearing in the media and because rates are a little bit higher.
Right. And then we talk about this, and there's always some new people on the mix every time we do this. There's a thing, and I can't remember these things. Shop the house, date the rate. Is that what it is? So
marry the house,
whatever
date
rate that
the
you
rate.
have now, you can refinance it when things get better. So don't let that hold you off from getting a house without having to put $100,000 over asking now. Yes.
Yes.
Okay.
Marry the house, date the rate.
Right.
Also,
strategy.
do you want to talk about the 2-1 buy down, just to give everybody a little bit of information about that? Because that's a pretty
Hot. That's a hot program.
Well, the idea behind the 2-1 buy down is it's a good alternative to a price reduction for both the seller and for the buyer. Because if you do a price reduction, you will see a very little impact on your overall monthly payment. So let's just say hypothetically you had a $20,000 price reduction. That might save you, I don't know, $100 a month, something like that. But if you were to apply that same thing to a temporary 2-1 buy down, what that does is it reduces your interest rate for the first year by 2%, and it changes your interest rate on the second year by 1%. So if, let's say it's 7%, the first year it would be 5%. And then the second year would go to 6%. And then for the 3rd through the 30th year, it would go back to the note rate, which is the 7% interest rate. If you look at that on a monthly payment variance, it's much, much more significant. I mean, we're probably talking over double, sometimes even triple the savings on a monthly basis with a temporary buy down compared to a permanent price reduction. Now, obviously, the price reduction is going to stay with the home for the entire length of the mortgage. But exactly to Julie's point, right? If you marry the house, date the rate kind of idea, right? If you do a temporary buy down, you take advantage of these lower interest rates rather than a sales price reduction. Interest rates drop as they expect to. When inflation gets back in check, you can refinance, and anything that's left in that savings account, basically, because that's how a temporary buy down works. The seller funds the temporary buy down, and then any money that's left over that hasn't been used to subsidize the monthly payment can then be used to reduce the balance at the time of a refinance.
That's great. Okay.
So then you're divorcing the rate and getting remarried. Is that right, Scott?
you get a couple extra bucks in your pocket. So you can get the the new stove that you're craving after. So that's okay. So we got a really good opportunity, guys, at this point to see what's happening with the market and also what's happening with the finances. Now we've got a couple questions for our wonderful panelists. Eric, do you want to ask those questions?
Yeah, why don't we start with the with Robert's question over on the right here? It says, who are the people that are selling? Is it people that moved here during the pandemic and getting island fever? Maybe tech people that have to go back to the office. Anybody have any thoughts on who's selling at this time?
Well, we know a couple that sold because they have grandchildren that they wanted to see. And then there's you know what, I also heard of someone selling because they just said, you know what, I've been here for 3 years and I miss the things that you can do on the mainland. I miss fall, I miss colors, I miss everything. So they said, time to go.
Well, it also goes back to the idea that there's a lot of people that you know, there's a life. A lot of people don't make it past 3 years. You know what I mean? We're talking about family or jobs or whatever. So all those people that bought during the pandemic, it's coming time that they might be saying it's time to, you know, move back to the mainland. So that might be some of the people that are moving. Traditionally, that's who it is.
Mm-hmm. Yeah.
I have one in escrow right now where the sellers are leaving because of medical. There's not the same medical facilities here that somebody might need if they had a specific problem. So I think medical, the 3 years, and grandkids are probably the top 3 that I see.
Yeah.
Consistently.
Yeah, if you're going to move here, get in here after your kids graduate from high school, but before they have children, and then you'll have a couple like years, really good years here. So, but
Okay, so
we're also going to talk
I
about.
I have a few more questions just to sort of give everybody some ideas to think about. And what does everybody see coming up for winter? Do we see any changes coming? I mean, you know, is traditionally more people start coming here to buy houses in the winter? Do we going to get more inventory on the market, more people buying, more people selling? Any thoughts on that?
My
Right.
thoughts.
Yeah, go ahead.
Okay, this is Amber. Well, my thoughts are probably just because this is how it is normally this time of year, that it'll probably stay pretty slow, probably pretty low inventory until about March. March is usually when we see more real estate, you know, busy real estate market. So that's kind of my, you know, prediction, but it's a pretty safe prediction just because we're going into the holidays.
Yeah,
Amber, good.
I was gonna say the same thing, Amber. You know, we're coming up on the holidays, so it's kind of interspersed in November, December. But I'm hoping by January, you know, the shock of this market has weared off a little bit. Maybe interest rates are down a little bit, and so I'm thinking, you know, and that's traditionally our high season anyway. So I'm hoping things will kind of pick up steam. People are less, you know, we're still in such a new market, and so I think by the beginning of the year, kind of wrap their head around it and be ready to just get back out there.
Yeah. I was at the I was at the tour meeting today, and there was like maybe 4 things coming on the market right now. And when they asked the entire crowd of 85 realtors, do you have anything coming up soon? Total silence. So that says something too, that there's either everyone's holding back to wait to the, you know, January, February, early March to catch the snowbirds, or we're gonna have an inventory problem.
All right. So the next question I have is not kind of geared to the people here, but a lot of people that are moving here have to sell a house in order to come here. And so this is kind of a general question about moving even farther back, since it takes a little while to get here. And does anybody have any advice when they're going to be selling, such as, you know, how to get your house ready, all of those kinds of things of looking long term of what's it going to take to get there? Because I know that, you know, today we're talking about maybe getting an inspection before you put your house up on the market to know what's going on. Does anybody else have any ideas for that, for the people that are on the mainland that are coming?
Well, you know, I would say that, you know, obviously declutter, it should be nice and clean and smell good. I do think a pre-inspection is a great idea, and to fix all the things. I know in Hawaii, you have to have straps on your hot water tank, and that many times that is not the case because it's kind of a newer requirement. And smoke detectors, those things that are kind of safety related, have to be done. Even if you're going to sell it as is, you're still going to have to, you know, fix your smoke detectors and things like that. So a pre-inspection is a great idea to know what you're looking at.
Mm-hmm.
I'm not a real estate agent. I'm a mortgage loan officer. However, you guys know we just bought a house on the mainland, so I will give my 2 cents here. When we were shopping, and there are a lot of homes available because the inventory has definitely risen in a lot of the areas on the mainland, is we were comparing the houses that with the same square footage or similar floor plans or whatever. So if there are other homes in your neighborhood or in your area that are similar to yours, price here is the best, make sure it looks the best, like look at what else is on the market in your area. And I mean, obviously, if you're working with a professional realtor, they'll be able to help you price it right and give you the good advice, but educate yourself and see what's available in your area and get an idea and see how other people are staging their homes. And if you like the photos, if you see them online, you're like, that looks amazing, mirror that, and don't do the things that other people have done. You look at the photos and you're like, those are terrible.
Yeah. How about virtual staging? And then you go there and you find out it doesn't look like anything like what you thought it was going to look like.
Right. Yeah.
Okay, so I've got one last question here, just to tie us back into what we were thinking about, and that is, and we don't have to do a full. Maybe this could be more later, but at least give everybody an idea of the difference between leasehold and fee simple. So, because there's a lot of people on the mainland have no idea what those two words here are, and it's a Hawaii thing. So, if we could just give a couple examples, that'd be great.
Delania, you're in South Kona.
I'm gonna jump in. Yeah, I mean, well, there's two different times you're going to encounter this. So a leasehold condo is going to be a different situation than a leasehold residential property. Leasehold residential, most of the time it's farming properties. A lot of times you're going to be required to maintain the land in a certain way. The biggest thing about leasehold properties, aside from the fact that you own the property built on the land, but you do not own the land, is you're going to have a leasehold rent. There's going to be a time frame for that, and financing is very challenging the lower you get into. I think you need Marla, is it 5 years more on the lease on the lease than the loan? On the loan than the lease, right?
Conventional loans, you need 10 years beyond the date that the loan matures.
That the lease extends, yeah.
Yes, and on
Yeah.
FHA it's 5.
So if you go into a leasehold property, over time, your only option to sell with maybe a cash sale, unless you're able to get a new lease done. So it's I mean, you could spend hours talking about leasehold and stuff. So it's definitely something to have a discussion about and research before you go into buying residential.
I'll add one more thing on the agriculture. Also, when the leasehold does come up for renewal, it's usually going to be more expensive than it was when it originally was. So you have to be careful that, you start out at a pretty low rate and you're like, this is great, I'm getting it, it's very reasonable. And then by the time they renegotiate, it tends to get a little pricey.
Well, and also the fact that you don't know what it's going to be. That's
Yeah.
the unknown that's so difficult to say, you don't know what they're going to do to raise the rates, especially as they get closer to the end of the lease. That's when you start seeing inexpensive
Yeah.
properties that you can't understand why that's so cheap in the market, right?
Yeah, you don't go into a leasehold to build equity into a property. You go into a leasehold often because you want to farm, because you want to get a good deal. You can usually get more property than you would buy at a simple cost, so you can get more for your money, but you're not. It's just a different approach to ownership.
And then can we talk about condo leasehold, because that's quite different as compared to the agriculture.
Yeah. I mean, you've dealt with. I mean, being on the residential manager on board, a lot about leasehold. Same rules apply. Well, no, I know financing is a little different on condos to the leasehold, but it's not as strict.
Yeah,
You do an additional fee.
The good news, there's not very leasehold condos out there left. Most of them have been converted over to fee simple. Along the way, they have been converting them over. So it's kind of rare that you do see them.
Yeah.
So the most of the ones that are left that I've seen that people have contacted us about, the lease expires too soon for us to do anything. Like there's not very many properties left that can be financed because it doesn't meet the guidelines.
So prepare to be paid cash for those condos.
And what's the condominium complex at on Palani, Konakai?
Konakai, yeah.
Yeah, and that's the one that they plan on tearing down at the end of the lease. So you buy a condo, and in 8 years, it's not going to be there anymore. So potentially, or maybe they're going to change it. You don't know, but you all of a sudden come to the end of the lease and they come up with a bulldozer, you're going to be in trouble.
Yeah.
That's true. Yeah. And then Amber, on your side, is leasehold prevalent? Like we have, it just seems like
Sorry.
it's all over.
It is not as prevalent as like the South Kona district. We do have some more leasehold like condo properties. I did just come across a property that my clients wanted to see in Hilo that was a 5 acre with a house on it, leasehold. So we do encounter it from time to time, but it's not super common.
Okay, yeah. So if you guys who are listening now and in the future, when you see LS leasehold, right? That's how so there's fee simple FS in the MLS or LH leasehold. So if you guys see those two, you'll know what the difference is. One means you get a chance to own the property forever, and LH means that you're basically is the word I don't want to be, you know, it's not really called sharecropping, but you're basically using the land to get money from, but you're not going to own it forever. Yes.
See a condo in Kona that's priced under $200,000.
Yes, if you see something that's crazy, like $167,000 condo in a market that has $500,000 condos, it probably has LH. So, and then, just before we, you know, because we have a few minutes, is there anything that anyone is seeing out in the world that you want to tell people? Like one of the things that we saw, Eric and I were driving a couple around for a neighborhood tour. I have not seen that many for sale signs in all the different neighborhoods in a very, very long time. So it does look like obviously inventory is building up. It's not as much as it was probably 5 years ago, but at least it's hopeful for people who are looking for different houses to look at, which I think is good. Anybody have a house that you want to talk about? Okay. So I see that Jim, you just got here. Sorry, buddy. You're gonna have to listen to the replay. But one of the things that Eric and I talked about too is that we have had a few people from the mainland who are going to buy in the spring and summer ask about what's it going to take to sell the house. And one of them did not have a realtor they were already working with. So I was able to find an excellent realtor in their area through our referral network to have the realtor go and basically do a pre-check on his house, give him an idea of what the house is worth now and what he needs to do to get it into a place where 3 to 6 months from now, he's going to be able to get top dollar for it and be able to get out. And so if you're one of those people, getting ahead of this before you actually need to is always a good opportunity. And if you are a buyer, it's never too soon to see if you're going to need financing to talk to our lender partners, because you never know what's on your credit rating or if there's ways that they can work with you. I'm telling you guys, Scott is a financial whiz, and Joe Egan, who they work with, is a very smart man, and Marla is an amazing person too. They can come up with ideas that maybe you hadn't thought of yourself that actually can be really good for you in the long run. And so unless there's questions in the chat room, Eric, do you see anything?
I do not.
Okay, then what we'll do is if you have questions after the program, please leave them in the comments and we will do our best to answer those. And again, if you guys are looking for Christmas gifts, I want to say I made calendars. Oh, so if you'd like your own calendar for West Hawaii, sorry, Amber, I'm gonna have to do one for East Hawaii next year. They're only $20. And if you would like one, I'm taking pre-orders now. And I'll put the information again below, but if you want to buy one, you email me at juliezpr@gmail.com and I'll make sure that you get one shipped to you by December 10th. So here's my sales pitch for today. So with that, we will say thank you to our wonderful realtors and mortgage partners. And we will see you guys in December, and keep an eye out for the date on that, because the 3rd, I think we're going to try and get these guys together for maybe, I haven't told them this yet, but maybe Wednesday, the 14th, because the weekend after that, obviously, is Christmas. So stay tuned, and thank you guys for being here, and we will see you guys all next month. With that, we say aloha.
Aloha.
Aloha.